Inflation remains. What do you think about that? Too complacent.
Listen, I don't think most of our clients are that complacent. I think they're aware of the risk. They understand, CPI came in softer than expected. They think there's a possibility that looks different, in the back when tariffs are put into place. And so they're aware of these risks. But I think it doesn't change their desire to generally be risk on, to know that being long equities over cycles tends to outperform inflation. It's very hard to time it to come out and come back in. So for those who are anxious, that's where we say think about hedges, right? I mean, there's a way to deal with that without, taking a tax gain and changing the nature of your portfolio. So I don't think clients are complacent, and I think they're just kind of riding through this, and we'll observe what happens and act accordingly.
Lastly and quickly, dollar weakness.
Yeah.
Is that concerning in any way? It's bullish, some would say, for multinationals,
Right.
Obviously.
Well, I think, first of all, it's putting in perspective that we're coming off incredible dollar strength for the last, 3 years plus. And so some of it is a little bit to be expected. And you'd sort of expect some pressure on the U.S. dollar with concerns around tariffs and the deficit. And then, today, I think, we saw some pressure on the U.S. dollar given the softer CPI than expected.
Mm-hmm.
The 2-year came in a bit. That's kind of what you would expect. I don't think, people are saying, does this mean people aren't investing in the U.S.? I don't think so. I think it means, that maybe some foreign participants are hedging their exposure, which I think is logical, right, to hedge that currency exposure. So I'm not particularly concerned about the U.S. dollar.
All right. We'll talk to you again soon. See what transpires in these markets. Sarah, thanks.
Thanks so much for having me.
Sarah Nason-Tarajano of Goldman Sachs up next. J.P. Morgan's Dubravko Lakos is standing by with his own forecast for stocks. He'll tell you what he thinks and where we're going. He'll do it next.
FCC Plus.
Welcome back to Closing Bell. Our next guest just raised his S&P target after cutting it just a couple of months ago. It shows how much sentiment has shifted with stocks edging towards new highs. Dubravko Lakos, JP Morgan's head of global market strategy, joins us now. It's good to see you. Welcome back.
Thank you, Scott.
You did raise your target, but it's to 6,000. We're already there. So you think the next 6 months are going to bring us what?
Well, look, if you looked at the details of our last 2-3 reports, we've actually been pushing the bullish tactical trade since the end of April. And, the 6,000, year-end price target for us is really more a view that the market from here on is likely going to be range bound. If I had to sort of cut that up, I would probably say that in the very, very short term, the upside trade or the upside squeeze likely continues to persist. But then I think you have to start, worrying about the fact that tariff volatility could pick up as you go into July. And I think there's a risk that future payroll numbers take a hit, given some of the sort of changes that have happened on the policy side earlier this year. And so that could then induce another growth scare. And then after that, we need to see how basically the Fed responds, which I think, we could see a situation where the Fed perhaps also goes a bit sooner than expected. And then that basically sets us up for, again, a more bullish backdrop in the back end of the year. So range bound broadly, with maybe still some further room for upside in the very, very short term.
So the bulls, I don't want to paint you as a bear because you're not, but the bulls who say you really need to lean in here make the case of, look at what just happened with the mega caps and earnings. They justified all of the belief in this super cycle. Look at what's happening on the Hill with the administration. They don't want the story to unravel. They say, well, we know what the president's going to do at the end of the day on the tariffs. That's bullish, because he's not going to put his foot all the way to the floor, because they learned their lesson one time already. The taxes are going to get done. You're finally going to get M&A. And have you seen what's happening with the IPO market? It's going crazy, the ones that have listed in the last week or so. Now, the sample size is obviously small, but that would just tell you there's a lot of pent-up demand that's going to come to this market. And then, oh, by the way, the Fed's going to cut also. If there's even a sniff of labor market unravel, they're going to come to the rescue too. So it's hard to be bearish in that environment.
I would not be bearish, but I do think there will be, various pockets of volatility that we'll have to digest in the coming period, and thus I would probably be then looking for that weakness to then reload back into the market, given that we've had already such a strong run. So our conviction level at the market right now here, I wouldn't say is that high. Where I would be actually placing the conviction is really more in the long-short momentum trade, which we have also been sort of pushing quite heavily, and that is basically staying long the broader AI complex, the big tech complex, data center complex. That's the area that we think continues to outperform on a relative basis.
That's the thing. Like, if that does outperform, then that theoretically takes the S&P 500 into uncharted territory, correct? So that's reason enough, if you're in the right stocks and leaning in the right area, to think that 6,000 looks light on the S&P if that trade continues to work, even if some other areas don't.
I agree with that. But again, as I mentioned earlier, I think we need to be very open to the fact that we could take a payroll hit at some point in the coming months. And so let's say if early July you get a negative NFP, I do think that the market could go through a short-term growth scare, and you could have a relatively easy sort of flush unwind. And then I would most likely look to lean against that and make another sort of upside case for the market.
And you don't think we already had that, right? Because I feel like we already went through one of these growth scares already, and then we realized, wow, you know what? The economy is more resilient than we thought, again. The consumer is more resilient than we thought, again. And earnings turned out to be way better than we thought they'd be, again.
Yes, we did. We did have a pretty, I would say, big shock that we basically faced. I don't think we're going to face anything similar in terms of magnitude, but nonetheless, given that things have sort of run up and have the potential to keep running up in the course of the next week or two, I do think you probably want to sort of take a slightly more conservative view as you go into July, and then look to sort of replay the bullish thesis a bit later on. So that's why I would sort of make a little bit more of this like range-bound call around the 6,000 level.
Looks to me like you're on your back at HQ or one of the offices on the trading floor, but you were at the quantitative conference that JP Morgan was having, which was all about AI, right? So this was right front and center for you in terms of where the action remains.
I mean, no, this completely reinforces the theme for us. Yes, we're literally in the midst of our JP Morgan Research Quant AI conference. AI LLM is really at the center in terms of the topic. Huge interest, record attendance, and this is an area that I think remains very exciting, and we're going to continue to see a lot of new developments and sort of applications, even for the world of investing, over the coming quarters. And so it's something that we continue to focus on quite heavily, both within research as well as JP Morgan more broadly.
Dubravko, we'll see you soon. I appreciate your time as always. Always enjoy the conversation.
Thank you.
Dubravko Lakos, JPM. Up next, track the biggest movers into the close today. Christina Partsenevelos joins us with that. Hi, Christina.
Hi, Scott. Well, we have a tech giant that hit record highs today after promising software growth, and a meme stock taking a hit on new debt plans. All of those details are after this short break.
Now.
Less than 15 from the closing bell. Back to Christina now for the stocks that she's watching. Tell us what you see.
Let's start with Oracle because it's did touch all-time highs earlier today. The S&P leader really impressed investors with its guidance on cloud growth. By the way, that all-time high was 202, so not that far off. What we're saying is that the CEO, Safra Catz, said the company expects its cloud infrastructure revenue growth rate to continue to accelerate to 70% in fiscal 2026, and that's from 50% just this past year. Also guiding for stronger revenues that analysts expected in fiscal 2026. Really, it has to do with the backlog, should be increasing about 100%, which is a pretty bold statement coming from the company. Meantime, let's move on to GameStop. It's not the same story at all with this stock price falling today after announcing a $1.75 billion convertible note offering, which is really just a short-term bond that eventually would convert into stock later. GameStop intends to use the proceeds for the offerings for, quote, general corporate purposes, including investments. That's the key, the investments, because the company's investment policy as of late has been to buy up a lot of Bitcoin. Most recently in May, it bought about 5,000 Bitcoins. And you can see the market doesn't really like this idea of a proxy. Shares down about 23%. Bitcoin proxy, I should say. Scott?
All right, good flag for us. Thank you, Christina Partsinevelos. Still ahead, Adobe reporting top of the hour. We'll set you up for those numbers coming up. The bell will be right back.
To be opened. Stanley.
We're now in the closing bell market zone. Christina Partsinevelos with us today watching AMD's Advanced AI event. Pippa Stevens looking at Adobe, reports in OT. Tanay McKeel live for us at Coinbase's Crypto Summit. Christina, we begin with you and this AMD event, which has been going on this afternoon.
Yeah, AMD really throwing down the gauntlet against NVIDIA with its new Instinct MI400 AI chip set to ship next year. The big play, though, is that these chips can stack into a massive server, or massive server racks, I should say, called Helios. Think of like hundreds of processors working as a giant brain. AI companies need exactly this type of hyperscale setup to train their large language models. AMD's betting it can undercut NVIDIA on both price and power consumption, with executives promising quote, aggressive pricing and chips that simply cost less to run. The company claims its new hardware beats NVIDIA's offerings for AI inference, which is the part where trained models actually answer questions and generate responses. But you can see AMD's stock hasn't really gone, I would say, anywhere this year, down 26 in the last year, 2% today after this big AI event, suggesting investors really aren't convinced that this, David, can take on Goliath of AI chips. With cloud providers, though, and AI companies burning through billions on computing power, AMD's timing really couldn't be better. The question is whether customers are going to be willing to risk switching from NVIDIA's proven ecosystem for potential savings. AMD's CEO Lisa Su will join our John Ford in just a few minutes for an exclusive interview to discuss these latest announcements.
All right, good stuff. Christina, thank you very much for that. To Pippa Stevens on Adobe, which wants a little piece of the AI pie as well. Earnings in OT.
That's right, Scott. So Adobe earnings are on deck as the AI competition heats up, with Adobe underperforming peers so far this year. Now, the company did recently announce a price hike for Creative Cloud due to added AI features, which is set to go into effect later this month, with analysts noting that FX should also be a tailwind relative to when guidance was provided. Now, this will be the second quarter where the company reports revenue for its two newly introduced segments, with Evercore ISI saying it's still hard to determine what's good enough for each segment. That said, the firm said maintaining mid-teens growth in the business professionals and consumer segment would be helpful in fending off the bear narrative around Canva and the extent to which it's seizing market share. Now, JP Morgan adding the stock represents an attractive valuation. Scott?
All right. Pippa, thank you. Pippa Stevens. Emily Wilkins has some news out of Washington, D.C. for us. Emily, what do we know?
Hey, Scott. Well, we were watching that rescissions package and is now passed the House. This is the one to really formalize those DOGE cuts to USAID, as well as cuts to PBS, NPR, other public communications. But a real nail biter of a vote here in the House. It looked at one point like it was going to fail. You had as many as 8 Republicans voting against, but then leadership managed to convince some of those to go ahead, vote to support this package and support it going through. It now heads on to the Senate. And Scott, this is, of course, a really big test for the White House's ability to cancel some of that funding, as well as a test for fiscal hawks to really be able to get their way in cutting some of the government spending. This entire package, $9.4 billion, just a drop in the bucket when you consider the $1.6 trillion that the government spends. But it is a start, and expect more packages to come.
All right. Emily Wilkins, thanks for the update there. To Tanay McKeel on Coinbase, what's happening?
Yeah, Scott, hundreds of people in finance, tech, and policy all here at the 3rd annual Coinbase State of Crypto Summit. All the big names you can think of represented: BlackRock, Shopify, Coatue, some of the heavy hitters that are on stage. Now, in the past, Scott, this conference was all about the future of crypto and what the industry might accomplish with a more crypto-friendly Washington. But this year, it's all about what's happening now, the conversations that are taking place now, and the products that are launching. Several products from Coinbase today, which I think might be the start of a big boom in product launches this year.
Tanay McKeel, thank you very much. We'll go out green. Dow looks to get about 100 points. We'll see how it settles into overtime with Morgan and John.
The end of regulation. Cardinal Health bringing the closing bell at the New York Stock Exchange. Innovate GBM doing the honors at the NASDAQ. Stocks looks like finishing largely higher, with the exception of the Russell 2000 and the Dow Transports. Oracle hitting an all-time high in the back of strong earnings and bullish commentary on its cloud growth. Tech heavyweights Microsoft, NVIDIA, and Broadcom all moving higher in sympathy. Microsoft at another all-time high.
Chime, the big IPO of the day, shares opening at $43, soaring 37%. The company priced its IPO at $27 per share. A number of staples names hitting multi-year lows, including Brown-Forman, ConAgra, and Campbell Soup. Brown-Forman is at its 2013 lows. Gold's hitting a one-week high, though. That's helping the miners. Newmont, Harmony, and Barrick Mining are all up more than 3%.
Well, that's a scorecard on Wall Street. Welcome to Closing Bell Overtime, where winners stay late. I am John Fort, along with Morgan Brennan. I'm live from AMD's Advancing AI event in San Jose. In just a couple minutes, the company's CEO, Lisa Su, is going to join me here live. We're going to talk AI, CapEx spending, and increasing competition.
Well, thanks, John. Also ahead, a first on CNBC interview with Coinbase CEO Brian Armstrong on their partnerships, and one of Chime's board members and investors on today's IPO as well. But let's first begin with the U.S. economy, because yields are falling again after the latest read on inflation came in lower than expected in this afternoon's auction of 30-year bonds. U.S. dollar index falling to its lowest level in more than 3 years. Meanwhile, President Trump pressuring Fed Chair Powell to lower interest rates, but saying he will not fire him. So here to break it all down, CNBC's Steve Leisman. Steve.
Hey, Morgan. Yeah, the president once again haranguing the Fed chair to lower interest rates, saying the U.S. could save $300 billion a year with a 1 percentage point decline in rates, and arguing that inflation remains low enough for the Fed to cut. While the president's math looks to be about right, the question is whether the Fed lowering rates would have the desired effect. The U.S. pays an average rate of 3.36% on its marketable debt, according to Haver Analytics. Over a 20-year period, that average has sometimes moved up and down with the Fed rates, and sometimes it's completely ignored, as you can see in the middle there. More so, the average maturity of U.S. debt, about 6 years. So while it could help, it would take time for lower rates to filter down to the average rate paid by the government. But more importantly is whether the long end of the curve will follow the Fed. The 2-year tied to the hip with the Fed funds rate. The 10-year, it can have a mind of its own. It could even rise amid concerns the Fed is too dovish on inflation. The key for the Fed is that inflation remain low over time and that the tariff impact proves to be benign. We had it for the first month. They're going to want to see it over several months. The key for the president, inflation is low now, and he wants those cuts now. Morgan?
Here's the sticky thicket to me. Steve, if you have a bond market, and particularly in the longer end of the curve, that is revolting against the U.S. debt load and deficit spending, but what's contributing or helping to increasingly contribute to that deficit spending is interest rates, how do you get past that?
Well, it's the deficit spending that is the biggest part of it, or the lack of revenue that's the biggest part of it. Obviously, interest rates and the interest expense is a piece of it, but you can't just go and order rates to decline. You see today, rates went down when the inflation came down. Perhaps the president would like to order rates to decline. I don't think he has that privilege yet. So the issue, Morgan, becomes the idea that you have to kind of bring them along with you. The Fed controls the overnight short rate. The 10-year is way out here, and the 20 and the 30 even further out. So there's a very tenuous connection between the two. You have to kind of finesse it, and one way to finesse it is to show, among other things, that you have inflation under control. Another way to do it, as you suggested in your very question, Morgan, is to show you have the deficit under control. And my guess is the latter is the bigger part of it.
All right, Steve Leisman, thank you.
All right, Morgan, as we just mentioned, I'm here at AMD's Advancing AI event in San Jose, California, where AMD just unveiled a slate of new AI hardware, software, and systems designed to compete with NVIDIA and others. Shares are flat for the year, underperforming its major peers, but have rallied 17% in the past 3 months. We're here in San Jose. An exclusive interview is Lisa Su, AMD's CEO and chair. Thanks for having me here.
Thanks for being here, John.
So talk to me about these systems. You got a chip sitting there next to you that's, I guess, fresh out of the oven. What is it that you're announcing here? What level of competition does that raise you to with the others out there?
Yeah, absolutely. So first of all, it's been a big day for AMD, really exciting. I love talking about our new products. You know that. So we just recently announced our MI355 chip. This is our newest AI chip, and it is fantastic. It's the best inference accelerator out there in the market. And if you look at what's happening in AI today, we're just seeing so many more use cases, John. Like, people are using AI everywhere. And so one of the most important things for our customers is to get more efficiency from their chips. So when you think about tokens per dollar, that's kind of the metric that is used. And this chip will give you 40% more tokens per dollar, which just gives you the opportunity to offer AI at a much more affordable price across the world. So yes, very exciting. We also previewed our 2026 lineup. We're on an annual cadence now of new accelerators, and we're not just doing chips, but we're doing big rack scale systems. And so all of that was part of our announcements today.
And investors are puzzling over how the innovations will translate into share gains versus the likes of NVIDIA. So why is it beyond chips now, and why is it about racks? That was a big part of the ZT Systems acquisition. Put that into perspective with the go-to-market and the design component to satisfy the customer need.
Yeah, absolutely. So, look, we're really excited about the momentum that we're seeing in the AI market these days. If you look today, 7 out of the top 10, model builders and AI companies are using AMD products. That includes Meta, Oracle, OpenAI. Sam Altman was here with us today. Meta and Oracle were here. XAI, Tesla, to name a few. And when you think about what they need, what they really want is the latest generation hardware that gets into the data center and then gets into serving production workloads as fast as possible. And so to do that, you require, of course we require chips, but we're also putting a significant amount of investment into the software layer to make it just super easy to use. And we're also building rack scale solutions. So we just completed our ZT acquisition. We've added 1,000 design engineers, and the whole purpose is so that we can help our customers get to the market with our AI solutions as fast as physically possible.
You've got competition with NVIDIA at the high end, certainly. And then the hyperscalers, the big cloud providers, who are also now big AI providers, AWS, Azure, Google. They've got their homegrown AI chips that they're trying to use as much as possible to keep their costs lower, their margins higher. How do you play to both ends of that and win? How does openness fit into your strategy?
Yeah, well, John, when you think about it, I view we're still in the very early innings of AI. And frankly, as much as we've seen a ramp up in AI, we have sort of said that the market is going to grow over 60% annually for the next number of years to over $500 billion in 2028. That's a huge market. And, in that market, what people want is the most flexible and the most programmable, architectures out there. And that's really what we're building. And, the key point in this is, again, we believe in deep co-development with our partners. So hardware, software, systems coming together, making sure that we have the right compute for the right application. And, that's what we've shown. If you look at just how much improvement, I can just give you some stats, right? If you look at the solution that we're just talking about, the MI355, it's...
Hold it up high.
Oh, hold it up high, yes. I want to make sure everyone gets to see my new baby here. We're very happy that it is now out in production. But, this is like 3 times the performance of just what you saw last year. So, that's just how much value you're getting. And we previewed our next generation, our MI400 series, and there we're going to see like 10x, types of improvements. So that's how much we can get from the hardware and working closely with our partners. And you asked about open. Open is the foundation of what we do at AMD. I'm a real believer in the fact that an open ecosystem is how you get the best innovation into the market. So we have thousands of developers here today. They're playing with our hardware, they're learning our software, and we want all of them developing on our stuff so that we get the benefit of all of that innovation, and they get the benefit of bringing their best ideas in.
Sometimes closed is faster, comes to market faster, and can be more profitable. If you look at Apple's approach, is AI going to be different?
Well, think about it this way. I think if you look at history, you have examples of closed and open. Look at sort of data center systems, right? You had Unix being the operating system of choice to start with, but Linux actually has taken over because it's open, and people weren't quite sure. And look, Apple's a great ecosystem. iOS is a great ecosystem. But there are limitations to what developers can do there. And you see, on the other hand, Android is an open ecosystem, and that allows sort of an alternative there. So, look, I think you're going to see both. But I believe in the end, open is going to win because there's so many smart people out there and there's so many great ideas. People want to be able to have control of their own destiny, and that's what an open ecosystem is all about.
Speaking of which, how did DeepSeek change the conversation a few months ago, and maybe even what customers are demanding, the level of experimentation that developers are doing?
Yeah, it's a great point. I think I'll talk a little bit about DeepSeek, but maybe overarching, probably the largest trend we're seeing in AI is that the workloads are changing so fast. Like, people are innovating every week. You see new models coming out from folks like OpenAI and Google. DeepSeek was kind of a very interesting injection into the AI market because frankly, it was an open model and it did things somewhat differently because there were some limitations in the compute that they have. And whether you're using the model or not, you've learned things from its openness, and people have adopted some of those techniques into their proprietary models. So, my main point is we can all learn from each other, and the faster we learn, the faster we iterate, the better the answer is going to be. And I think that's the lesson of an open ecosystem.
M&A. I think you've done around 9 acquisitions in the past 3 years, 3 last month. What does that say about the velocity that you're trying to achieve and why you're reaching outside AMD for it?
Well, look, AMD is a growth company. That's our mantra. And, we are very fortunate in the sense that we have access to huge markets. We have a fantastic balance sheet. And we're going to use that balance sheet because I really believe that this is the best time for, AI investments to really pay off. Being still very early in the cycle, we want to make sure that we have all the pieces for us to go faster. Frankly, that's what our customers want is, how do we innovate faster? So we've made a number of acquisitions. Most recently, we closed our ZT acquisition, which brought in rack scale systems. We've done a number of software acquisitions that have helped really broaden our software capability. Just last week, we announced a couple with, Bream and Lemoni joining us, but from, Nod.ai, Silo AI, all of these companies have been great additions to our overall AI capabilities. But John, we're also doing a number of strategic investments. The fact is, big companies have, tremendous capability, but some of these AI native companies are extremely, extremely capable, and they have great ideas. And so we want to learn from them as well. And that's why we're doing a bunch of strategic investments.
How, if at all, are these geopolitical tensions affecting demand?
Well, there's no question that we have to be very mindful of the geopolitical situation. We are at a place where AI technology is so important from a national security standpoint, and we get that. So we do spend a lot of time with the administration to make sure that we are fully understanding the framework in terms of what we can do. But the fact of the matter is AI demand is very strong. And the thing that we're seeing that's actually pretty interesting is, people used to buy AI chips mainly for training and pre-training these large foundational models. That's what the largest builders do. Training continues to be important, but we're actually seeing a significant uptick in inference applications. And that just says that there are more people using inference. And, from our standpoint, when you think about things like, you hear about people talking about agents and agentic AI, that requires not just GPUs, but it also requires CPUs and traditional compute. So we're seeing the benefits of that in our overall market.
And the difference between training and inference is like the difference between practice and actually playing the game.
That's right.
It's one thing to have a plan, and you have to develop that using AI, but then when it's time to actually give answers, do business, that's where inference plays
Every time you ask a question, every time you ask ChatGPT or Grok a question, that's an inference query, and the longer the question you ask, the harder the question you ask, the more compute you need, and that's what we do. We provide the compute to do that.
How quickly can we stand up more and better chip production in the U.S.?
For sure. Look, it's a huge priority for us to get geographic diversity. It's a big priority to get more manufacturing in the U.S. I think we've seen some big strides. So the progress that's been made on the silicon side, for example, in Arizona with TSMC's new investments as well as some of their announcements. We have some of our chips running there right now, and they look really, really good. We're continuing to work across the board in getting more manufacturing in the United States, and it's just good business to have good diversity.
All right. Lisa Su, CEO of AMD. Thanks for having me here.
Thanks for being here, John.
Well, meantime, John, Adobe earnings are out. Pippa Stevens has the numbers for us.
10 cents. Revenue coming in at $5.87 billion, also ahead, and that was record revenue. Now, looking at the segments, both digital media revenue and digital experience revenue both topped estimates for the quarter, with total digital media ARR also surpassing expectations. Now, the guidance is good here. They raised their full year 2025 revenue and EPS targets, with the new ranges also coming in ahead of estimates. The stock initially was in the green, but now you see it's down here about 1.5%. John?
Yeah, Pippa, thanks. Morgan, this is interesting. It's hard to react immediately to the stock here. Adobe has not been responding well to earnings. Usually it's been because of the guidance, and Adobe has been guiding cautiously, but a lot of people want to wonder about Firefly uptake and Firefly monetization. Adobe has been saying they're taking their time, making sure that their AI technology, Firefly, is working well for enterprise customers and customers overall, and that they're rolling out those monetization capabilities over time. Perhaps these initial numbers suggest that, but of course we're really going to want to listen to the commentary on the call about the amount of uptake and overall how customers are responding.
Yeah, record revenue for the quarter. I mean, John, just raising EPS and revenue guidance, the fact that you just noted historically they tend to be a little more cautious with their forecasts. So the fact that they raised guidance, perhaps a good sign here. And of course, coming on the heels of Oracle earnings, which we got right here in overtime yesterday, and which sent those shares to record highs as this AI rollout does seem to be continuing and seem to be propelling the market higher.
Yeah, I'm practically across the street from Shantanu right now, here in downtown San Jose. I wish I could shout over and say hi, but I'll also jump on a plane in just a few minutes and be with you again tomorrow, Morgan.
Well, safe travels and wonderful work and insights out there in California with AMD just now. So hurry home. All right, well, we've got RH earnings out as well. Melissa Repko has those numbers for us.
Hey, Morgan. So shares are up by double digits, about 15% after the luxury retailer missed on revenue but beat on earnings. RH reported revenue of $814 million compared to estimates for $818.1 million. And it reported earnings per share of 13 cents on an adjusted basis compared to a loss per share that was expected of 9 cents. It's worth noting, Morgan, that the company had slashed its guidance significantly 3 months ago. In a letter to shareholders, CEO Gary Friedman noted a few things the company is trying to do to deal with tariffs during this time, one of which is delaying the launch of a new concept it had planned for the second half of the year until it gets more certainty. The other thing it's doing is accelerating its move of sourcing out of China. So he said they're about 16% sourcing, and they plan to drop that to 2% by Q4, Morgan.
Wow, that's a big change.
Yes.
And you see enough companies doing this sort of thing, it sort of speaks to all the different dynamics and impacts that a tariff scenario such as this can have. Melissa Repko, thank you.
Thanks.
Shares of RH spiking about 15% right now. Well, the S&P 500 was also higher once again today, up nearly 20% from the April lows. It's within 2% of a new record high. So coming up, our next market guest says this rally still has more gas in the tank. He's going to break down why when overtime returns. Welcome back to Overtime. Well, stocks finishing the day in the green. The S&P 500 and the NASDAQ are tracking for their third straight positive weekly performance, up more than 2% so far this month. Is the market uncertainty behind us, or should investors expect more bumps ahead? Well, joining us now, Carson Group Chief Market Strategist Ryan Dietrich and BD8 Capital Partners CEO Barbara Duran. It's great to have you both here. Ryan, I'm going to kick this off with you. You're here with me on set.
Yes.
You were bullish back in mid to end of April. It was a contrarian call at the time. You're still bullish. Why?
We are. First off, thanks for having me in person. This is neat to be here
it's
like
great
this.
To have
This
you.
is fun. There's a couple of reasons. I think just look at today. Look at today. I hear all these people saying breadth is weak, market breadth is weak. But Morgan, when you look, we're in all-time highs on the S&P 500 advanced decline line, on the NYSE advanced decline line. All 11 sectors in the S&P 500 are above their 50-day moving average. To me, that says there's a lot of breadth. And one more thing, I don't know if I've heard this mentioned yet today, that bond auction was pretty solid. Remember 3 weeks ago we had that bad bond auction and the stock market sold off, yields went up, nobody wants to own the United States. Well, today it came in really solid. So there are some real positive things that say to us, this bull market's alive and well.
Barbara, do you see it the same way? Is the bull market alive and well? Would you be buying here?
I would not be buying here, but it's hard to argue with Ryan because things right now do look pretty good. You just had the PPI today, excuse me, and CPI yesterday. Inflation continues to come down, but you are clearly seeing signs of a slowing economy with job growth. And no matter where you look, whether it was the jobless claims higher than expected today, the continuing claims the highest since late 21, you look at manpower stats, job openings down, posting, the non-payroll. So you're clearly seeing a slowdown there. And we do know that the tariff impact has yet to be felt. I mean, it was only just in early April that we had the widespread tariffs and the ones that were shocking in number. And so you're just going on May data. And a lot of companies did do forward ordering, so they have their inventories. And if you listen to the Beige Book, the Fed Beige Book last week, they talked about anecdotal talks with businesses who said they expect to be able to pass costs on by August. So we haven't seen it yet, and we don't know what the impact will be, which is why the Fed is on hold and why they're saying we need to see more. But right now, the market could move higher, but at 22.5 times forward earnings, I don't think there's a lot of upside. And again, with all the uncertainty still out there, I find it hard to see that there would be new highs in the market as on the indices.
We just had 2 straight days, Ryan, of encouraging inflation data. Jobs, and I realize continuing claims came in higher than expected today. We've been seeing that. But in general, the hard economic data has been solid. Is that an encouraging trend, or is it the calm before the storm?
Barbara brought up some great points there. There are clearly some cracks. Like you said, labor market, maybe there's some little cracks in the foundation. But overall, we think the economy is still pretty solid. The consumer is still solid. Look at confidence, right? Consumer confidence recently jumped. Small business confidence jumped. And CEO confidence jumped. I know before I came on, you teased the up 20%. So I'll talk about that for a second. S&P is up 20% the last 2 months off those April 8th lows. We know that. Only 5 times in history have we found the S&P 500 up that much in a 2-month period. Off the lows in 74, off the lows in 82, 2009, 2020, and then late 1990s in. And what I'm getting at, this blast of strength that we've just seen is not consistent with a short covering rally or, just this bear market rally. It looks to us like, I know it sounds weird to say, like almost like the start of a new bull market. I would disagree. I think we've been in a bull market since October of 2022, but we're just getting going again. And this still looks really solid to us.
Barb, I want to get your thoughts on tech and what we've seen, whether it was Oracle yesterday. We just got some pretty strong results from Adobe that the market does seem to be digesting. Microsoft trading at a record high. I could go down the list.
Yeah. Well, I think all these companies, what they have in company, it's really the AI play. And that was even with Adobe was the big question. They're adding generative AI into all their products. They're sort of phasing it in and trying to scale it up. And so as we talked earlier, we haven't seen the in-depth numbers here, but that's what's happening. And with Oracle, IBM, they're really getting it right. And the demand, and so many people have said, and I agree, that we are in the early innings of this AI phenomenon, where people are still figuring out how to apply it, and where they are seeing big efficiency and productivity improvements with their businesses. So I think that continues to be and will continue to be the underlying theme, and that will ramp up. And I think these companies have a lot of them have long runways of growth.
Okay. Barbara Duran, Ryan Dietrich, thanks for joining me here with the S&P finishing up about 0.4%. 60.45 is the level there. Well, Bitcoin pulling back slightly today, but still within a few percent of its all-time highs. This comes as Coinbase hosts a State of Crypto Summit, along with a recorded message from President Trump who said he's proud to be the crypto president. Up next, Coinbase CEO Brian Armstrong joins me with more on the state of the industry right now. There's so much to talk about. Overtime, we'll be right back.